What is going on, Future Focus family? My name is George, that's Matt, and every day we go live and make videos to help you make money investing. And we try to talk about everything that's going on in the economy. Today, as of right now, the S&P 500 is down 0.15%. The Dow is down 0.18%. The NASDAQ is up 0.08%. The Russell 2000 is down 0.50%. We have gold that is up 1.18%. It's holding that resistance level about 1850. It's currently about 1833. We have silver up as well at 3.58%, which is a good look for silver. It's been kind of getting beat up. The 10-year bond is currently up as well to 1.32, so it's up 2.32%. And the most interesting one to me was the VIX, because the VIX was down this morning about 0.50%, but as of right now it's up. As the president was speaking, it just started spiking up a little bit, so it's up 0.73%. So one of the main things I wanted to talk about to get this segment started was the job reports number. So I'm going to quickly share my screen, and we could just look at a quick article where it's talking about the job reports. Matt, welcome as always. So the job reports disappoints. Only 235,000 positions added versus expectations of 720,000. Non-farm payroll growth in August increased by just 235,000 versus expectations of 720,000. The unemployment rate, however, did fall to 5.2%, which is a positive and in line with estimates. It was currently prior to this, it was 5.4%. Leisure and hospitality jobs were flat during the month, and wages rose at 4.3% year over year. And a lot of that is all tied together. So let me unshare this. A lot of that is all tied together. The reason the payrolls are going up is because people have to pay people more than the government is paying them in order for them to be incentivized for them to come back to work. What do you think this means? What does this job report mean to you, Matt?
It's hard to interpret, man. The whole jobs report, you got to break it down. Are they talking about retail jobs? What kind of quality jobs that they're talking about across the spread, right? So you have to factor that in, and then the percentages that make up. But moving beyond that, like somebody pointed out, this actually might be stock market bullish. And the reason I say that is it'll lead to more stimulus, right?
Yes,
Um,
sir.
oh well, we're still crumbling. We need more help. We need more
Yeah.
money. So
And this
Mhm.
might be in line with what you were talking about when you said that you didn't foresee the Fed changing anything or begin to taper at all. But
Mm,
this may be incentive for for Jerome Powell to be like, you know what, we're gonna hold off on tapering because they want to see things beneath. They want to see themselves under 5% before they start doing anything. You know what I mean? That's like their goal for the unemployment rate.
and I just want to clarify that I could definitely, I know I'm very passionate. I could definitely be wrong, but I was willing to double down on that one. I was willing to bet, and again, I could still be wrong, but um, I've one thing with the media outlets, and I'm not saying I'm all alt news. I watch a little bit of everything, honestly, but just when you look at the paradigm, right, and you look at the Afghanistan war, and I'm gonna loop it together. I don't think we knew how bad it was over there until the last couple of weeks, right? We thought
Mhm.
we had things decently under control. We heard reports, but we didn't realize how bad. Like, we weren't expecting them to take over in a couple of weeks. And I relate that to the market. Um, I don't think we really understand the full scope of what shutting an economy down for a year can do. We see the stock market going up, and we hear tremblings. We see the repo market spiking. But we say, no, it's not that bad. It's not that bad. Jobs are coming back. Banks are doing buybacks, but those are those are things in a vacuum.
Mhm.
Those are things in a vacuum. We'll see going forward how really bad or good this is.
Yeah, and a lot of people will point to the fact that September is usually a bad month for the stock market. You know what I mean? September is usually a month where people are starting to pull out a little bit, but this year was kind of different because come August, it's like right now everybody's trying to get ahead of everything. You know what I mean? So it seemed like August retail, a lot of retail pulled money out of the stock market.
Vacation,
Um,
vacation,
yeah,
summer
so
vacation.
that has to do a lot with it too. But a lot of people were afraid, like, you know, all right, at some point there has to be some sort of correction. A lot of people you hear talk about correction. There's going to be a correction, 10% correction, 15% correction. And you saw a lot of that money come out, but now people are like, all right, what am I going to put this money in? Crypto is at all-time highs right now. So where can I really put this money? So they're putting it
You
right back
know,
into
you
underloved
know where to
stocks.
you know where to put the money. They know it. I'm sorry, they may not know, but they'll find out. I know China knows. I know Russia knows.
Palantir knows.
Palantir knows, right? But don't worry, they'll find out. They'll find.
Yeah,
They'll
so
find out. They'll
they
find
might
out.
have already found out because you already saw the price of gold is kind of staying above that 1800
Mm,
price range, which I
mm,
told you,
mm.
which is like it's a strong level. It's
Yeah,
a key
yeah,
level.
yeah,
That
yeah.
$1,800 is like is more of a mental level than an actual technical level.
So did you see that? And I don't. Did you see that knockdown in the middle of the weekend? Did you see that?
No, no.
I'll send it to you later. I'll send it to you later.
What happened? What do you mean? It dropped a lot
It,
during the weekend or something?
so somebody, I don't want to misquote it, but somebody tried to sell like $4.1 billion worth of gold contracts on a Sunday night. On a Sunday night, but that's like, and somebody made the comparison. Imagine you're a street vendor and you're trying to sell something in the middle of Sunday night. You don't do that expecting to get sales. You do that. You understand what I'm saying? Like you
Yeah,
do
yeah. To manipulate the price so it drops and then you could buy more at a lower price. Is that what you're getting at?
I don't and again, this is not just me. They're currently in court right now. They're taking JP Morgan to court, Merrill Lynch to court. And these are the traders that are actually saying out their mouths that they spoof the gold market.
Yeah, yeah.
But from what I understand, they bring the contract price that, and how they do that is they make more contracts, but they secretly buy the physical, but keep that price nice and low. And
Yeah.
again, I could be crazy, but I dare you to walk around the New York Federal Reserve and ask the police what they're guarding. What's in that basement? What are they guarding?
Uh, what has it been looking at on the exchanges, on the gold exchange, silver exchange? Like, are they still down on supply, or how's the supply looking? You told me a few months ago you couldn't really buy any because they were out of supply. Like, has that been replenished?
That's a whole nother that I don't want to take away from the theme of your show. I'll keep it on 10 seconds. Supply has come back a little bit, but who I normally other venues that I normally buy from. So the US Mint. Um I normally, when I buy coins from them, I normally receive it in 2 weeks. It's been 5 months and nobody's
Mm,
received the coin yet. Well, for certain coins, people are on a 5 month waiting list. And the director of the agency admitted that there was a global shortage on silver, and then he retracted the statement, said no, it's not a shortage. I just ran out of blanks. So
gotcha.
I don't want to take up the show, but
No, no, it's all
a
good.
lot of
All
madness
right.
going.
The next segment in the show is meme stock mania. A lot of that's the big reason a lot of people, watch are gonna watch this episode.
Okay.
And the meme stock, just real quick, because a lot of people already know this, but just for those who don't know, the way these short squeezes go is there's two parts. There's Act One and Act Two. In Act One, they buy and they hold in large amounts, and it forces the price to spike up. And Act Two, there has to be the second part where the people who are shorting have to cover their losses and they have to buy at a higher price, which means the price go even higher. And that's what happened with with GME in the very beginning with GameStop. But right now there's two. There's SPRT and there's BBIG, and these are two that you see a lot of mentioned a lot on Reddit. And I went and did some research to see. There's two parts to it. You have to see how many of the actual shares are shorted, and then you have to see how much of the daily float there is, how much of the momentum is there during the day, how much volume trading, and in a single day you'll see billions of shares being exchanged hands when the short interest on BBIG is about 5 million and it's about 8 million on SPRT. So worst case scenario, even if the shorts covered, it still wouldn't do anything with the amount of shares that are floating around the system and exchanging hands. Does that make sense? So these are two that the second act may never come. All right. So not saying the price can't continue to rise, but these are two of the meme stocks where the price it's going to be hard for the price to continue to run up. Today for AMC, for example, there was a $6 call on an analyst, and it has to do with the fact that they don't see them getting revenue next year, 2022 at all. And in 2023, they get them seeing like 50 cents, like an estimate of about 50 cents. Because remember, they still have, even though they're not making money now, they still have obligations. They have to pay their employees. They have to pay rent. They have certain obligations. Those movies, they don't get them for free. They have to pay for them when they receive them. So these are all considerations that you have to take. The next point is if you do want to short squeeze some stocks, some to consider would be Clover Health, as they have a large percentage of their stock shorted compared to the float. Another one is MMAT. Another one is Blink, BLNK, which is EV play. And the last one is Wayfair. These are short squeezes that can still have potential to shoot up like the other ones did. Michelle Bravo, she just commented, thank you. We love you. Thanks for tuning in. Croy Wen, thanks for tuning in. Killer Selver, thanks for tuning in as well. We love you guys. Keep participating. We hope this you guys like what you're getting here. What is your take on this whole meme mania? Like, what do you think? Are you participating at all?
Come on, man.
Like, well, I mean, when I say at all, it doesn't mean you have to be with the apes. You can still be with on the other side. You know what I mean?
No, that is true. Nah, I don't either side.
Okay,
and
so you're not.
I'm a value. I try to be a value guy through and through.
Yeah.
But the Wall Street bets. I'm assuming that's what we're talking about here. Mm-hmm. They're like the Knicks. They're like my favorite team. They're the Knicks. We made the playoffs this year. Good on you. But if you think Wall Street is not gonna adapt, right? We saw this play already. And in my humble opinion, Wall Street bets won, right? They caught them off guard with GameStop. But if you think you're gonna run the same play every time against these guys, I don't want to refer to name calling, but these are the likes of Bernie Madoff and things that these are crooks, right? And have a long systemic history of doing whatever they have to do to win. Do you think you're gonna run the same playbook twice on them with no only thing changed was the ticker symbol? That's it. That's not good enough. A, B. I've always pointed this out to the AMC crowd. All it takes is the CEO not to have diamond hands and share dilute, which he's already done. Who knows he's not doing it, behind the table. That and also I see the vision with Wall Street bets. By the way, I want to let everybody know I'm for them. I'm for them 100%. I see the vision. I personally think it's strong.
Ape forever strong. You know what I mean?
Yeah, I won't say I'm an ape. I'm a chimpanzee. You know what I'm saying? I'm halfway there with them, but not all the way. And I'm gonna tell you why. It's because the playbook, it's the wrong playbook. They're not protecting themselves from a covert move from the executive row, right? All they need to do is share dilute, take a golden parachute, and that's pretty much it. And let
Yeah,
AMC burn to the ground with them in it. But meanwhile, they get out at these prices.
yeah.
So I think AMC, and I know this is gonna sound biased, they had it right with silver. I don't know why they went off. Or granted, yes, the companies might secretly hold it, but at least you know you hold something that will never go to zero. AMC could really go to zero.
Yeah, you're right. There's something that's to me is a bigger fear. Like I'm with them. I'm with the apes as well. But you have to have an exit strategy. So
Mm.
let's say it does go to 100. Let's say everything they want happens. The
Let,
shorts
let me
cover.
let me let me say this. Let me say
Go ahead. Go ahead.
you're
Go
a
ahead.
master. You if this was 2K, your signature move would be the exit strategy. You're one of the best exiters I've ever seen. I do think your timing, you do it a little early, but your
Mhm.
exit strategy is
Thank you, man.
Mozart.
Thank you for that.
Mozart.
Uh,
Mozart.
yeah,
I
man.
had to
Because
let you know.
I'm not about tops and bottoms, man. I'm about
Mm,
just
mm.
getting in low, getting in high. I'll take it where I can. But thank you for that, Matt. I appreciate it coming from
That's
you.
true. You know
Uh,
I keep it real with you. I tell
yeah.
you when you suck, but you do that really good. You do that really, really good.
So yeah, my question is for them. There's so many of them. And let's say it does go to 100, which a lot of them that's their goal, like we got to get this AMC to 100. So let's say best case scenario makes it to 100 or 200. Now what? Are some going to hold it cuz they think it's still worth more than 200, or are they all going to try to sell at the same time? So there's two parts to that. When they're all trying to sell at the same time, some of them are going to be able to sell for that $100, but as there's more sells than buys, one, who's going to be buying it at that price from you when you're trying to sell it to them? And then two, who's going to like the price is not going to stay there when everybody's trying to sell at the same time. So you may be selling at 50, 40, $30 just because everybody's trying to sell at the same time. If the goal is $100 or $200. So have an exit strategy. Today they interviewed, I don't know his first name, something Coors. They
Okay.
say he's one of the original apes, although Matt knows like I was in it $2 way before a lot of these people. But they say he's one of the original ones. And they asked him, and he kind of like brushed it off. They're like, "So what happens?" They asked him that question: "What happens when it reaches $100 or whatever?" And he's like, "Well, I can't tell you what everybody's gonna do, but I could tell you what I'm gonna do." And he didn't even give you an answer what he's gonna do. It's like he wasn't trying to give his strategy away. You know what I mean? He's like, "I'm gonna analyze the technicals and then see this and then see that." He didn't give you like that ape answer, which you would like reading the Reddit posts and all that you think you would get from them. Does that make sense?
That's a valid point because don't we preach one for all for one? Why
Yeah.
don't you want to tell me what you plan on doing, right? Now, granted, I guess the argument could be made, oh, you don't know who's listening. Wall Street might be listening, blah, blah. So maybe we could give him a pass on not completely revealing the strategy, but it sounds as if he's more focused on his exit plan, right?
Yeah.
As opposed to everybody else's as a collective. And that's what I don't like about shorting literally bankrupt companies. You can go to zero as opposed to a commodity. It might shoot to the moon and it might crash, but it will always have a worth. It will always have a worth. Copper, whatever you name it, oil, it will always have a worth.
Yes, and again, man, my heart's with all of you guys. I hope everybody makes money. I don't want anybody to lose money. Even everybody looks at the pension funds and the hedge funds as like negatives, but they're managing regular people's money too. So if they lose, they might lose somebody who was relying on that pension, who's just a retail trader
Mm,
who doesn't
mm.
know this. You know what I mean? You
Oh,
have some people who are like 65 years old who are depending on this money. And it's not their fault that the hedge funds are deciding to do this with that money. So
that's
while
true.
you're winning, there always has to be losers. And trust me, the hedge funds are going to be the last ones to lose. They're going to bail each other out like the banks do. And at the end of the day, they might not win, but they're not going to lose. The people who lose are the people who are depending on that hedge fund, that fund when they retire. So just keep that in mind. Have an exit plan. what is it? What are you going to do if it reaches $80? What are you going to do when it reaches $90? Some of you bought in at $70. I saw it on Reddit. Somebody's like $70 ape, $60 ape. When do you guys think it's going to go back to that price? And a lot of people don't want to answer because they honestly don't know. A lot of people don't really talk about GameStop anymore. It's really, really focused on AMC, even though they're kind of correlated. Both of them go up and down on the same type of news. But there's a lot of meme stocks now. So another thing that I could see happening is that people get bored with AMC and they move over to another meme stock. So like the apes, they hold it, but they move on to another one and try to do it over there as well. And once you start trying to go to different, you're dealing with different types of companies who have different strategies, and you're betting against these algorithms. It's not even a human thing. You're betting against algorithms that are tracking what's going on in Reddit. Like they have algorithms in their bots that are like trying to see how many mentions there are. Right now we have 2 viewers, so thank you guys for staying tuned with us. Any last thoughts on the meme stock mania, Matt?
Stop investing in what's popular. Stop that. You want to invest in something that is somewhat in the dark and unknown. Now, if it becomes popular, that means you made money. But stop going for what's hot, because the next thing you know, it's not hot anymore. It's almost like fashion.
Yeah, Matt will tell you, like, we try to find things, and we try to find these stocks before they become that, before they become what they are. And that's a good way to look at it, a good way to play it. The next thing we're going to talk about is the next FAANG. Matt, did you come up with 5 companies that you believe will be the next FAANG?
Man, I have a few. I didn't get all 5, but I have a few. I'm gonna throw Tesla in there.
Okay, so that's one we share. That one was in mine.
It depends. I could see them not being a thing, but if things don't go according to, or do go according to plan, they can be a thing. I'm gonna say Coinbase.
Okay.
It could go. There's no middle ground. It's either gonna be a thing or it's not going. It's not gonna exist on exchange at all. I really don't see much of a middle ground for them. I have those 2. Who else could be a thing?
I can't believe you. Go ahead.
I used to really believe in iRobot when I was a young pup. I used to believe in iRobot. I think home robotics will take over a lot of our inconveniences domestically, like cleaning up and mopping and vacuuming, taking care of your dog. But for some reason, they haven't really been that innovative, and they play it just following them. They play it too safe.
Yeah, as far as them, I think what hurt them is that their technology was very easily copied, and they got, like, the Chinese came up with like 4 different products that did the same exact thing that theirs did, so it was hard. Like, people were either pay $69 for this iRobot or get the off brand for $39. You could get 2 for almost the same price as a regular iRobot, but yeah, man, so that's 3. You have for those who don't know what is FAANG, it's the biggest market cap companies out there right now. So you have Facebook, Apple, Amazon, Netflix, and Google, all $1 trillion companies now. Some are multi-trillion-dollar companies. Microsoft is in that conversation as well. So just what's your next one?
I'm gonna say Disney.
Okay.
I'm gonna say Disney. It's kind of big. You could tell they're doing a lot of restructuring. They're trying to adapt to the current times. But once they get that formula, they could fight Netflix on the home streaming front. They already do a good job with the live entertainment or theme park amusements. Once that comes back online, continue to sell their merchandise, continue to make movies. I like Disney. I think Disney will. I know we normally consider them a blue chip, but they could. Yeah, I could see them becoming a FAANG.
I
Um,
pick one more. One more.
this is the toss up. This is a, and my list could be scrubbed. Like if I thought about it more, I would definitely, I could potentially scrub it. This is just like a quick list I came up with. Um, I have two. I have two. Well, let me say one. I like skills.
Okay.
I think if skills, um, I know that that's a long shot. I know market cap, you're probably saying you're out of your mind. But if e-gaming continues to take off, right, and we see the kids, right, kids nowadays are born with the iPad in their hand. They leave their mom's womb, and they just start playing on the iPad right away.
Yeah.
In this digitalized age, I could see e-gaming taking off, and as long as skills stay true to their fundamentals and they don't they don't allow themselves to be bought out, they could be very big, very big.
Nice, bro. So I think that was five good calls there. We had some similar ones.
Let
The
me hear
first
this.
one, I'm gonna start with the one that you started with, which is the one. But before I even talk about what my companies are, I even have some honorable mentions as well.
Oh,
Um,
okay.
so before I even start with what I chose for, I just what I looked for. I looked for ecosystems. I look at
Mm,
what has made Apple what they are, Google what they are, Amazon what they are, and is that they create ecosystems. They don't just give you one product; they give you an array of products that makes you like want to have everything them. For example, Apple, if you have an Apple phone and you want to watch, you got to get the Apple Watch to go with the Apple phone. Then some people have the iPad with the MacBook with the Apple TV, and then they come up with a streaming platform called Apple TV, and you're like, hey, I might as well get that too. You know what I mean? So they're coming up with these ecosystems that just keep you wrapped inside of them. Amazon is big with that. Um, like Amazon, they have
good
their
point.
music, they have their videos, they have their delivery service. So the ones that I came up with were first of all Nvidia. I think Nvidia
Good
is,
one. Good
huh?
one.
Yeah, I think Nvidia is is going to
Absolutely.
be is already a problem, and I think it's going to be a bigger problem, especially with this pending acquisition of a company called ARM.
Mhm.
It's just going to help their customer base grow. It's gonna there's something I looked for: total addressable market, and potential total addressable market. The next one I'm going to go with is one you went with, which is Tesla. And like I said, currently they just now have five big companies within just Tesla. And they're trying to do the same thing. They're trying to sell car insurance now. They're trying to sell internet service through, I mean, even though that doesn't really fall under Tesla, I'm sure Tesla's going to benefit from that somehow because uh, Tesla is an investor in SpaceX. So now they have all these satellites called Starlink that have been launched in the sky, and that's going to be able to give you internet service anywhere you go. So that's my second one. For obvious reasons, I think Tesla has a long way to grow. The next one is PayPal. I think when they spun off of eBay, that was one of the best decisions that eBay could have ever made. PayPal has become a monster in its own. We talked about the PayPal mafia the other day. PayPal is like doing more. They're getting into the blockchain. They have cryptocurrencies that they're allowing you to use under the experimenting. Another thing that PayPal's trying to do, this is news from this week. I'm not sure if you heard, but they're going to build a trading platform. They're going to do a platform, and I think it's going to be trying to compete with Robinhood. So like PayPal, think about it, man. Like you have everything in one shop. Right now, like if you have Robinhood and you want to go buy something and you want to use money from your brokerage, you can pull it out and then go and send it back to your brokerage. It takes us a few days. Now imagine if you're telling retail traders, you can use the money that you have in PayPal, go and buy a stock, sell the stock, and then receive money, get money back. It's just PayPal is they're doing that. They're trying to grow. You know, they're buying little companies here and there, and PayPal is expanding. So that's my number two. Um, so far I have Nvidia, Tesla, PayPal. My next one is Uber, and Uber is
Oh, that's a good one. That's the one I
yeah.
missed.
So yeah, Uber is another one. Like they're
Yeah.
trying to do more. In the beginning, they try to do too much too fast. They try to compete in too many markets too fast. And what happened was in China, Didi outdid them, and it's just because they couldn't have a sole focus. Um, Lyft kind of was competing with them hard here, but because Lyft was just focused on the ride sharing, Uber was trying to focus on ride sharing and ecosystem. Like I'm gonna go worldwide, while Lyft was like concentrated in the United States. So Uber was competing with a lot of companies that were in the ride hailing business, and like now they've what they ended up doing with Didi, they bought 10% of the company and they moved out of there. They said, you know what, Didi, we're going to take 10% of your company and we're going to move out. We'll let you guys have the market share in China. Then they started concentrating on things like, food delivery. They purchased, who was it, Grubhub, or they purchased one of the food companies, which all it's doing is expanding their total addressable market. They have Uber Eats, obviously, and they're trying to be the last mile delivery service, just like Amazon could get it, from A to B. They're trying to be that. They're trying to bring you your groceries. They're trying to bring you whatever you want. Stay at home for all you care. Like we're gonna bring you what you need. So Uber is my fourth one, and my last one is my long shot, and is Palantir, and it's simply because of the technology they have is enabling them to try to have foresight and see what's coming before it comes. They have a lot of customer base that is growing. They're investing too in SPACs. Like they've been investing a lot of different SPACs. So they're trying to be like a little Berkshire in the background. They had that $50 million bold buy of physical gold. And I think they see things that a lot of other people don't see. Their technology allows them to have that deep foresight. So that's my FAANG, my next big largest market caps: Nvidia, Uber, PayPal, Tesla, and Palantir. Now my honorable mentions. The first one is one you mentioned. It was Disney. Again, ecosystem. They're growing. Like they have, as soon as the parks open back up, they have cruise lines, they have hotels, they have the streaming service, which saved them during this whole pandemic. And in that streaming service by itself, they have these big ecosystem within that ecosystem. Look at Marvel. Like all these people that want to stay tuned with the Marvel movies, now they got to go buy the streaming service to go stay tuned with the shows, because the shows are connected to the movies. And they have some of the biggest companies out there. They have Harry Potter, which people love. They have Star Wars, which has a big fan base. So they have a lot of huge ecosystems. And then they have Pixar. They have a lot of kids stuff, and kids stuff will always be a way to sell merchandise, to sell plushies, to sell pillows and sandals and all this stuff that has them. So Disney is an honorable mention. I had to throw a fintech one out there. So I'm gonna throw SoFi out there, because SoFi is in a lot of different spaces. SoFi will be my fintech long shot play for this. Shopify is another one that I could see, making a surprise amplification. They grew a lot last year because of all this. And my last one is Twitter. And just because Jack Dorsey is open-minded with things, and he's looking at, like, I don't know if he's trying to build his own like Ethereum, his own like blockchain. He's trying to make a way for Bitcoin to be able to be like Ethereum. So he's trying to work on that. It's going to be a difficult thing. It's not an easy task, but what do you think? I liked your list. What do you think of my list? Any
Oh man.
what are the pros and cons? What do you think?
Mostly pros. When you mentioned it, I definitely missed some. And I think the one we shared, it was two we shared that I did not mention. That was Uber. I could see for
Okay.
some reason I get these Uber vibes.
Yeah.
The day they came out, I was like, yeah, I could see them being a FAANG in the next 10 to
Yeah.
20 years.
Of course.
So that was a good call. And you know what? I was honestly thinking about Palantir, but I kind of got a little scared in saying that, because at least for right now, they're kind of a niche market, right?
Yeah.
Looking at their customer base. Now, you brought up the fact that they could turn to Berkshire. My only issue is, will they get in trouble because of all the insider information that they're privy to?
That's a
Um,
good
but
point.
but I, for some weird reason, I thought about them as a FAANG as well. Um, I'm looking at the CEO. He's not afraid to do unconventional things.
Hmm.
That in itself. But I did want to add this. You said your criteria was
Ecosystems.
yeah, which is great. My criteria, or my chief criteria, is I put a slash in there. Uh, famous CEO slash Wall Street darling.
Hmm.
And what I notice, and I'll show how they kind of merge. What I notice is, before a lot of these stocks became a part of thing, all their CEOs were in the headlines. And then once you consistently become in the headlines, kind of like what we see Musk doing now, um, all of a sudden the Wall Street Journal is writing on you. They're talking
Okay.
about you on CNBC. Um, you know, what other major media outlets? Like, once your name permeates in that world, it's almost guaranteed hundreds of billions. Like I said, I was with Tesla. I'm no longer with them, but I was with them when they were under a $20 billion market cap,
Hmm.
right? And all you heard was Elon Musk's name, for better or for worse. It was almost like Trump. For better or
Yeah.
for worse, his name is circulating, and that, as they say, there's no such thing as what is it? Good or bad publicity.
Publicity. Yeah.
And that's the truth. The money
Yeah.
follows the publicity. So, Steve, let's talk about it. Steve Jobs, right? Big name before he was a thing. Um, Jeff Bezos, somewhat of a big name before it was a thing. Netflix, I would say not so much. Google, maybe, somewhat. Um, Mark Zuckerberg, obviously a big. His name was big before they even took off, really, right? Before they were associated as a thing.
Yeah.
So, I say big name CEOs is a chief requirement for me.
Okay, all great points, all great points. So that was the FANG. The next thing I'm gonna give you as a bonus is just an it's gonna be an asset. It's another tool for your toolbox. This is another website that I think is great. I'm gonna share this with you guys real quick. So this website right here is called Datarama. So Dataroma, and this is a something you could come to try to help you with your portfolio. This has a lot of good info from really big investors, or what they like to call super investors. So as you can see here, it'll show you something like plain, like the top most owned stocks, the top 10 stocks by percentage. You could look at that. The top big bets. These are where people are putting like 50% of their portfolio in here. On the left hand side, you have the super investors. So you have people in here like Bill Ackman, which is Matt's favorite investor for a long time. You have famous investor from Appaloosa. His name is David Tepper. You got Warren Buffett. So we could click on Warren Buffett, and it'll show you what is owned by Berkshire Hathaway and how much of the portfolio is that, the reported price per share, and the value of the entirety. So look how much they own in just they own $121 million worth of just Apple by itself. They have
Wow.
Bank of America, which seems to be their second largest holding, and they're receiving dividends on that. So that's growing
Mm,
consecutively. Right here, it'll tell you their most recent activity, and it'll show you that you can see that they reduced by 0.62%. They reduced General Motors. They reduced Chevron by 2.32%. AbbVie they reduced, which hurts me because AbbVie is my sweetheart. They have Bristol Myers, which is Jim Cramer's sweetheart. Bristol Myers reduced by 15.27%. Merck reduced by 48.79%. But this is just an example. I'm not going to go through their whole portfolio. Another thing you could look at is something like the S&P 500 grid. Let me close this real quick. This just shows you all the companies in the. Let me go back to it. This shows you all the companies in the S&P 500, and all the way at the top left is the most owned by super investors. So Facebook is owned by 33 super investors, and at the bottom, Zebra Technologies in the S&P 500 is owned by zero investors. So if you want to like just try to see what are they buying, what are they selling, you could look at it by the last quarter buys, the last 6 month buys. You could see the super investors. Their top 10 holdings, which is good. You could try to see patterns. What does like every super investor have, or all these funds? So it's not just people, it's like their funds as well. What do you think of this? Have you seen this before,
No,
Matt?
that's a very good tool. That's a very good
Yeah.
tool. And I just want to throw this in there. I'm not sure if this company's listed, but it was part of your FAANG. Um, and one of my biggest, now this legit is one of my biggest regrets is Nvidia.
Hmm.
Um, and I don't know. So when you showed me the list of the stocks, it kind of took me back of when um that company probably wasn't even mentioned amongst the super investors, and now it's probably on their tip of their tongues. But I remember seeing the video when it was like $13 a share. I remember exactly where I was. I was unemployed at the time, just graduated college. I got a new tablet, and it had a Nvidia made chip. So I just kind of find it funny now that this is something that was relatively small, and now it's probably on the tip of the tongues of all the super investors.
Yeah, and they have a long way to grow. Even Elon Musk, he's trying to veto or trying to do something to make sure they don't buy ARM. Like, that's a that'll make them a huge powerhouse, even though they're a really huge powerhouse. Another one that's on the not even on the come up, but
Let me hear this.
I,
Let me hear
it
this.
just seems like every chip maker has to use them is Taiwan Semiconductors.
Okay.
Uh, and they're building a $20 billion plant in the United States uh, in order to reduce the strain with supply chains. So Taiwan Semiconductors has a lot of room to grow, because every time I hear a call from anybody, it could be Apple, it could be AMD, which is one of my favorites. They're all using Taiwan Semiconductors to finish the product off. So Taiwan Semiconductors is benefiting from all these other companies. Um, I'm I'm gonna speculate that even Nvidia uses Taiwan Semiconductors as well.
So that's another company that Nvidia was growing, but another company I want to mention, you just mentioned it, that I saw come back from the dead, was AMD. You know,
Mm.
AMD, I kid you not, I remember AMD at $2 a share. I remember AMD, it's 110 now. Um and I'm telling you, they were months away from being a meme stock. You know, they were that close to bankruptcy. Intel was the big fish in
Hmm.
the pond, and it's funny how things change now. Now you
Yeah,
see Intel,
trying to survive. Yeah.
man, right?
And AMD, I mean, I wasn't calling it at 2 to buy, but I at under in our chat under 80, I kept saying buy it, buy it, buy AMD.
Mm.
Um, buy AMD has the Xilinx merger that's supposed to be happening. They're purchasing Xilinx, so that's gonna enhance their total addressable market and bring them into a new segment in gaming, which they want to be in. So if you can't build it, join it or buy it. And a lot. I see 2022 being a lot of consolidation in companies. And what I mean by that is there's going to be companies buying other companies that you probably wouldn't have ever thought about, just with people trying to get into other sectors. So a lot of these smaller companies that you like, invest in them, because guess what happens when there's an announcement that Amazon is buying Nano Dimension technology? That price is going to friggin' jump up. you know
Let me ask you this: what's
what's
the
that?
odds? What's the odds of somebody buying Mara or Riot?
The odds are high. The odds are really high. Think about how much money Apple has in on the sidelines. You know, Apple could, it wouldn't be anything to just buy them out
It wouldn't be
outright.
anything.
You know, they would still have almost $1 trillion in there. You know, so just something else to think about. The last part, the last segment, we got a few minutes left. Matt's favorite segment of the day. Here we go.
Yes, sir.
Smash or pass.
Let's get it.
Let's get it. All right, so let me share my screen real quick. All right, Matt, today is your turn.
We got what we got. What we
I
got.
want you to pick one.
Talk to me.
All right, let's pick one that we mentioned. Let's pick Uber.
Ooh.
All right, so here we go. Uber on the New York Stock Exchange. Let's look at the 6-month chart. Looking at the 6-month chart, they're down. You know, they had a high of about $61. I purchased this about, I think it was $16. Let's take a look.
Wow.
Yeah,
Wow.
I'll purchase them around $16.
Goodbye.
But like you called me out on earlier, I always sell too early, and I sold around $32. So you know, I got my 100%, and I just sold out completely.
That's good.
It consolidated for a while, so I thought it was good, and then one day I just saw it shot up. So yeah, I missed out on a little upside, but it makes me feel good when I see it coming back down. I would buy back in myself. I'm smashing anywhere between $35 and $40, and I'm smashing hard anywhere under $35. What about you, Matt? What's your take? Smash or pass
this
on
is
Uber?
this is granted, I don't like macro conditions whatsoever right now. I think this is a potential smash. You know,
Okay.
this is a smash.
You have a price
I'm not gonna
target?
throw the whole everything in there, but it's a smash.
You have a price that you are buying or selling it?
I say now. I like right now.
Ooh.
I
So
like right now.
today, Matt is going all in on Uber, just so you guys heard.
Yeah, right.
As always, do your due diligence. Like, don't just jump into something because we jumped in on it. Do your due diligence, please. We are not your financial advisors, you know,
Right.
but do your due diligence. All right, let's
And
do another one.
strategies are different too, right? So if you're long term, that's why I wouldn't mind smashing now. If short term, I might not smash, but
All
long
right.
term,
Next one is Disney.
where's the price at?
All right, so the
Damn,
price
shit
is
went to
currently at
180.
180. You know, I
God
laughed at my
damn.
dad because when it was my son's birthday, it was no, it was Christmas, and the price was around 30 something dollars. Where was it? 120. It was around $130. And I'm like, I'm gonna buy my son a few shares of Disney. My father's like, all right, I'll give you the money. And he's like, but don't put it in Disney. Disney's not gonna go up anymore. Disney's come up too much. And it just shows like look where it's at now. You know what I mean? So Disney's still, I feel like it's had a lot of resistance. Look at this where it's been. It's been right here. That $179 price range has been like a big level of support and resistance. So if we could break above that, I think we got some room.
But
This is the
that
three. Yeah.
PE ratio is completely trash.
Ooh.
I didn't know it was that bad. That is garbage. You see
It
it?
could be, yeah, but it I think a lot of things aren't baked into it, you know. I think this could trade at a higher PE. Um,
You see how high this PE is? Unless I hope my computer is wrong.
what do you
That's
have it at?
294.
Oh, that's wrong. Yeah,
That's
this is,
wrong.
yeah, it's trading about 30 something.
That's what your PE says?
Yeah, which is still high. For those who don't know, the average PE for when the S&P 500 is on a healthy level is about 15 times next year's earnings, and right now it's trading around 30 times. So, what do you? Is this a buy at the $180 level, or are you passing?
Oh, shit. I would pass. And the only reason I would pass is because I think it's a great opportunity. I do. It's nothing wrong if you smash this, but I think I could do a little bit better.
Okay,
I could
so
go. I could go. Let me rephrase that. I could find something a lot more safer. I could find something with more growth, and I could find something safer.
all
But
right. So the last one, we'll put in here is we'll do Palantir Technologies. This is where we're at in the last year. It had a high of $44.88, and it's currently trading down from that at $26.62. This level right here at about $27 seems to have been a level of resistance. And you have a level of support around the $20.68 level, which, it could easily go back down to. Are you a buyer, or are you smashing or passing on Palantir at the current price of 26.62?
You know what?
This is the 1 month, by the way. Higher highs and higher lows.
I might actually smash that, and I'm gonna tell you why.
Go ahead, tell us.
Obviously, we like the gold acquisition, but I like the fact that they pay down their debt, so that gives me confidence that no matter what happens, they could ride out the storm. If there is a storm ahead, they'll be able to ride it out with confidence. So I do like Palantir. I do like that as a smash.
All right, and I'm on the same boat as he is. I'm gonna smash this one just because I'm looking at the long-term outlook, and their technology that they have is positions them to be ahead of any like they really don't have competition. They have government contracts that aren't going anywhere. They have contracts with companies like Coca-Cola and Amazon and Cloudflare and a bunch of different companies that aren't going anywhere. And they're looking for ways to reach the regular retail investor. And if they can do that, this company is going to be massive. In the meantime, while you wait, they have a good balance sheet. They have $50 million worth of gold on the balance sheet. Who knows? They may get into crypto next quarter. You never know. They have a lot of foresight, which is very, very important. And my last point will be that we always look at the leadership, and their CEO, even though he looks like a kind of a maniac, he has a great head on his shoulders. He has a good heart. And I'm a smash at these levels because I think 5 years from now, this stock could 10x. Like, I could definitely see that happening.
Wow.
Yeah. So that's a bold call, but at 26.66, I'm all right smashing with the knowledge that it could still come down to the $20 range or something like that, and I'm cool with that. But any final thoughts, Matt? What do you got?
Something just slipped my mind. I also too, we might have to check that Disney out because I'm finding another source that says PE is 294, and if that is, it's high. Granted, I've seen Amazon grow into a 1,000 PE, a
Yeah,
thousand.
Tesla too.
That's ridiculous. But I hear it. I feel it. I hear it.
Yeah.
I just want to throw out one company that I would have that I'm considering smashing right now. BlackRock.
Ooh,
Yeah, I like
I told
BlackRock.
you they're one of two companies that is allowed to have a fund in China that Chinese investors can invest in.
I like
Um,
BlackRock.
yeah.
For more than that, you just told me information I didn't even know, and that's not even why I like them. That's a major bonus though. They have their hands in every market around the world. Um,
Yeah.
they invest in everything from collectibles to other companies, everything.
Yeah, they're huge, man. Um, Talking about China, because it seems like we mention them every episode, but news from them today.
Oh
Tell me what you
wow.
think about this. The government is now allowing them to invest in commodities futures. Thoughts on that?
Y'all better be careful, man. Y'all boys better be careful out here.
And
Y'all boys.
that news coincided with the price of gold and silver both rising a lot. I haven't checked out copper, but gold and silver, like we talked about earlier, did rise a lot this morning. Um, what are your thoughts there, man?
They man, I know I sound terrible, especially when you get on
Let me see
camera.
what they're at. Yeah, go ahead.
But
So yeah,
it's
gold and silver are up 1.1, 1.1, and then 3.6 respectively.
that time of not consolidation, but the time of I want to say of hoarding. might be coming to an end. They might be, and this is not just about gold and silver. This is about copper. This is about the rare earth metals. They might be ready to say, "Hey, man, we're ready to control the market now. We're ready. We're ready to dictate price." Thank you, Comex, but have a nice day.
Yeah.
Thank you, LBMA, but you have a joyous day. My exchange is on now.
Mhm.
So
So it's crazy, and they have a lot of firepower over there on that side to do something like that.
you know what's funny, and it's funny that commodities get crapped on, but that's the one thing that could bring Tesla down. You know, a rise in commodity prices. Um, Disney not so much. They deal with a lot of um a lot of what's the word I'm looking. I don't want to say intellectual property, but more sweat equity, if you will, in a sense of human actors and directors, the movie side. So not really a commodity based company like Tesla. Their heart and soul commodities. Apple commodities. You see these shortage of chips,
Hmm.
it might get worse. So just be prepared for that.
All right, but we'll leave you guys with that. We had another great episode, Matt. As always, thank you for joining us.
Likewise,
You
thank
you
you.
always bring a lot to the table, so we appreciate it. Everybody who watched today, we had a lot more on today, which was great to see. Thank you all for joining. I hope you guys got something out of it. For Smash and Pass that segment, hit us up in the comments below if you have a particular stock or cryptocurrency that you'd like to see our perspective on and see if we're buyers at these levels or if we're passing on it at these levels. Let us know in the comments below. As always, invest in us and press that like button, invest in yourself, and smash that subscribe button. It costs you nothing. Until next time.